Hi, welcome to my video. This is part 2 video for your chapter 3, and in this video we are going to try this exercise, classroom exercise 3.1. Dan and Chu are the founders of Eli Enterprise, who share the profit or loss equally. After many years of operation, they decided to dissolve the business on 31st December 2019. So below is the statement of financial position of Eli Enterprise for the year ended 31st December 2019. So this is the financial statement for Eli Enterprise at the day of dissolution, and there are some information on the dissolution. So requirement: based on the above information, please prepare the following account as at 31st December 2019. So we are required to prepare dissolution account, bank account, trade payables account, current account, capital account. So the account has been provided in the textbook, but for a better presentation, I use Excel to present the answer. So please take a look on the Excel. So this is an extract on the statement of financial position from the question. So during the dissolution, the first step you should do is transfer all the assets in the company to the dissolution account. And for the bank, trade payables, and the capital and current account, we have to record the opening balances in the respective account. So let's start from the transferring of asset in the dissolution account. So for motor vehicles, the value is 125k. Office equipment 65k. And for the inventory 63,000. And for the trade receivables 35,000. So please take note that bank account is not required to transfer to the dissolution account. Bank account or cash account is not required to transfer to dissolution account. And after we record the asset, the next is we can record the bank balances, payable balances, and the capital and current account balances. So bank account, the opening balance is on the debit side because this is asset of the company. So the bank balances is 25,000. For the trade payables account, the balance is on the credit because this is a liability. The amount is 18,900. And for the current account, Dan is a positive and Chu is a negative. So we know that the balance for Dan is on credit, and for Chu is a debit balances. I emphasize again, for current account, if showing a positive value, this is on the credit side. If it's showing a negative value, this is on the debit side. And lastly, the capital balances. So we have record all the opening balances and also transfer the asset to the dissolution account. So basically we have complete step 1. So let's take a look on the step 2. Step 2, we require to transfer the current account to capital account. So let's come back to the current account. So for the balance of Dan, in order to transfer this amount to the capital account, we have to record on the debit side. in order to balance. And for Chu, we have to record on the credit side. So for this one, the double entry is debit the current account and credit goes to capital account. And for Ju, we credit the current account and debit goes to capital account. So this is the corresponding double entry and this is the corresponding double entry. Basically, we are just want to close the current account. So you can see that the amount is tally, no more balance CD and balance BD. So we have done step 2. So let's look at step 3. What is the step 3 requirement? Step 3 requirement, we have to record the amount that you obtain from the sale of asset or collection of fund. So let's look at the textbook. So in point number 1, it shows that how much the company can receive from the following asset. So motor vehicles can receive 60,000, office equipment 48, and 52 for inventory. So let's record this. So when we sell the asset, we will debit the bank account. So we receive these 3 items. For motor vehicles, we receive 60,000, 48,000 for office equipment, and 52,000 for the inventory. So we debit the bank account and credit goes to the dissolution account. So we indicate bank to show that this is transferred from the bank account. So this is the double entry. Debit bank account, credit goes to dissolution. Next, let's look at the information. For the trade receivables, we collect 32,000. So we indicate trade receivable here. $32,000, and we credit to the dissolution account. Next, so motor vehicle at net book value of 51,000 is taken over by Dan. So this refers to the step number 4. When you have any asset taken over by the partner, you should debit the capital account and credit goes to the dissolution. So this asset, motor vehicle, is taken over by who? It's taken over by Dan, right? So we have to debit the capital account. So we indicate dissolution motor vehicles 51,000, and we credit to the dissolution account. So this is the double entry. Debit capital account and credit on the dissolution account. Next, we receive 900 discount from the trade payables during the payment. So receive 900 discount. Tell me, my trade payables as of 31st December 2019 is 18,900. If I receive a discount of 900, how much I paid to my trade payables? So the payment is the remaining amount, 18,000. It means that the outstanding balances is 18,900. I pay to my supplier 18,000 and they give me a discount of 900. So for this one, this refers to step 6. Record payment of liability. When you have a discount, you need to recognize in dissolution account. So this is the double entry. We debit the liability, credit bank account and dissolution account. So let's record the payment first. So bank account, we make a payment to trade payables. The balance is 18,000. So this will refer to your trade payables account. A bank payment 18,000. So the remaining 900 we will record in the dissolution account. So we can indicate that this is a discount for better understanding. So we credit the trade payables account. We debit the trade payables account and credit goes to dissolution account. 900. Next, dissolution expenses amounting to 2,400 has been paid to accountant to carry out the dissolution work. So this refers to step number 5, when you have a dissolution expenses. When you have dissolution expenses, you debit the dissolution account and credit goes to bank or cash account. So let's record the dissolution expenses. $2,400 and credit to bank account. So basically we have record all the transaction for the dissolution, and the next step is we have to balance up the dissolution account to find out whether this partnership making a loss or gain from the dissolution. So from here we can know that the credit entry is more than the debit entry, the amount 290,400 and 243,900. So we know that the balancing amount should appear on the credit side. So when your balancing amount is appear on the credit side, this refer to what? Let's have a look. When the balancing amount is appear on the credit side, it means that this is a dissolution loss. When the balancing amount appear on the credit side, it means that this is a loss on dissolution. So let's indicate here loss on dissolution. So this loss shall share to two partners, Tan and Chu. So let's come out and working to find out how to share the loss on dissolution. So loss on dissolution. So what is the amount on loss on dissolution? Let's calculate. So we use 290,400, the debit balances minus the credit balances. So the balancing amount is 46,500. So we know that we have to share 46,500, and this is shared to Tan and Chu. So this 46,500, how we share it? We need to base on the existing sharing ratio. So let's go back to the textbook. They share the profit or loss equally. Equally means that Tan is 50, Ju is 50 also. It means that any profit or loss they share equally. So let's multiply with 50%. 23250. So 46,500. So this is the loss that we have to share to Tan and Chu capital account. So let's record. So by doing so, we have balanced the dissolution account. We debit the dissolution account and credit goes to capital account. So after you complete your dissolution account, the next step is find out how much that the company need to pay to the partner, or the partner have to pay to the company. So let's figure out. So we from here capital account, we can understand that the credit balances is more than the debit balances. So the payment amount shall show on the credit side, debit side, in order to balance the capital account. So how we can find out the balancing amount? 176 minus 74250. So for Tan is 102450. So we can balance the Tan capital account. And for Chu, we use 120,000 minus 25850. So we can get 94150. So we can balance the capital account without balance CD and BD. And this amount we shall record on the credit side of the bank account. So here we will indicate capital, Tan and Chu. Tan can get 102450 and Chu can get 94150. So we can balance your bank account after the capital repayment. If you can tally the amount without any balance CD and BD, it means that your answer is correct. So for dissolution account, actually is quite simple, because for dissolution account you will not have any income or expenses account. You no need to prepare the statement of financial position again. Why? Because for a company, when they are closing, it means that we will clear all the asset and liability in the partnership. It means that you will not have any liability and asset to brought forward to next year. So we throw everything to the dissolution account. So, and for the gain or losses on the dissolution, actually you can use a logic way to find out whether it's gain or loss. For example, let's remove the loss on dissolution at this moment. This is the cost, the original amount of the company asset, and this is the amount that the company collect from the selling of asset. So from this comparison, we can know that the collected amount is much more lesser than the original book value. That's why we have a loss on dissolution. You can use this logical way to find out whether this is a gain on dissolution or loss on dissolution. So this one quite simple, and for the exercise 3.2, I will practice with you in the live section. And that's all for chapter 3 video. Thanks for watching.